Dame i gospodo, dobrodošli na jubilarni 30. Kopaonik Biznis forum. U skladu sa dosadašnjom praksom, prvi dan foruma posvetili smo analizama makroekonomskih trendova na Zapadnom Balkanu i u Srbiji. Nakon toga sledi prezentacija KBF indeksa kompanijske reputacije, a dan ćemo završiti sa dva panela posvećenim IT industriji. Ujedno vas pozivam da večeras od 21 sat prisustvujete svečanom koktelu koji organizuje naš domaćin MK Grupa. A sada molim paneliste prvog panela da zauzmu svoje mesta. Izvolite.
Prvu rečenicu reći na srpskom, ova sesija će biti na engleskom jeziku, pošto su naši gosti svi iz inostranstva. Tema će biti dešavanja u zemljama Zapadnog Balkana, recent economic developments and outlook for the Western Balkans. Let me now continue in English. Let me welcome here, we have three guests for today. Stephanie Ebele, she is a regional representative of the IMF for the Western Balkan countries, for the group of Western Balkan countries, not all of them, right? Stephanie will tell us the details. Then we have Richard Eckert for the World Bank, who is going to be talking based on what the World Bank has recently analyzed in the Western Balkans and help us understand better the economic dynamics and the future outlook. And then I hope that we have Peter Sanfi from the EBRD, who is going to join us via a video link. Do we have him? Not yet. He's coming, okay. He's on the screen, excellent. So Peter, welcome as well. I suggest that we start in the order in which I introduced our speakers. Western Balkans is an interesting region. It has a couple of sources of information that has been constantly provided and updated by the World Bank and the IMF. Has been the focus of the EU because we have a number of accession countries in the Western Balkan region, and we do have a lot of unfinished agenda items. In addition, we do have a lot of events starting with the aggression on Ukraine, the war in Ukraine, and the disruptions in the world markets that particularly affected the Western Balkan countries because they are very closely linked to the EU that has been hit hard by this crisis and has been hit by the increases in energy prices and food prices around the world. So I hope that our speakers today will help us shed some additional light on these developments and help us discuss and understand better what has happened over the last 12 months and what are the challenges ahead of us. Let me start with Stephanie. Could you please tell us what you have prepared already? So we exchanged some emails, so each of our speakers will have initial 10 minutes to explain their position. Then we have follow-up questions to clarify or deepen the issues. And we reserve the last 10-15 minutes for the questions from the audience. So be ready. You can ask questions earlier, and we can just pass the questions on to our speakers. We'll decide, depending on the question, who will respond and how. Stephanie, please.
No, thank you very much for this invitation. It's a pleasure to be here and to share the IMF's view on the economic outlook and where we see the policy priorities for the Western Balkan economies during this very challenging and also uncertain times. So I would like to start with three key messages on this before going into more details. So first, the global growth in the Western Balkans is expected to slow this year before moderately rebounding next year. But the global outlook is less gloomy than it was in our October forecast last year. So this is good news. While the Western Balkan growth was more impacted by the pandemic than that one of advanced Europe and Eastern Europe, it is expected to be less impacted by the Russia and Ukraine war in terms of cumulative output losses. So then, second, headline inflation has gotten much higher than expected, also in the Western Balkans, but it is likely to have peaked or is going to be peaking. However, core inflation has continued to increase, and continued monetary policy tightening will therefore be necessary. And then third, in order to get inflation back to target, fiscal policy will also need to be restrictive in most countries, including the Western Balkans. And this will also help in an environment of tightening financing conditions and to rebuild fiscal policy buffers. So let me first share how the fund sees the growth and inflation outlook of the world economy and Europe and how this compares with the Western Balkans. I'm not going to quote specific numbers as we will be publishing our forecast only in April, but I can give you the direction. So first, world and European growth are holding up better than expected a few months ago because of a faster than expected decline in energy prices with a milder winter, better than expected compression of energy demand and the LNG imports. So, but labor market tightness, real disposable income and private consumption and investment have surprised on the upside. And this has been supported by greater than anticipated fiscal support and household spending. So still, we expect in Europe growth in 2023 to be lower than in 2022, as monetary policy tightening will continue to weigh on it. So in the Western Balkans, growth is also projected to slow this year from 3% last year to closer to 2% this year, before rebounding to slightly above global growth in 2024. However, overall, the Western Balkan economies are projected to be less impacted by the Ukraine-Russia war than the EU countries. And this is because their trade linkages to Russia and Ukraine were more limited and they were less reliant on natural gas imports compared to the EU due to coal and hydropower. But the negative terms of trade shock with the higher energy and food import prices and the resulting rise in inflation have still affected consumption and investments in the Western Balkan region, and especially in countries that heavily rely on net energy imports, such as, for example, North Macedonia. And further, since the EU is the region's largest trading partner, the growth slowdown in the EU is also impacting the region. North Macedonia's export to the EU, for instance, are close to 50% of its GDP, and in Bosnia and Serbia it is close to 30%. Then last, financing has also become much more challenging with rising policy rates and credit spreads. But while the Western Balkan countries have maintained market access, it is at much higher interest rates now. However, we see also a few upsides that are worth mentioning. So first, the relocation of Russians and Ukrainians to Montenegro and Serbia has reportedly offset some of the negative impact of the war on growth through higher domestic consumption. Then second, nearshoring, as firms are considering diversifying and shortening their supply chains or have been relocating from Russia and Ukraine to the region, and we see this in form of much higher foreign direct investment inflows across the region. Then third, the energy crisis is helping to accelerate the green transition, which is much needed here in the Western Balkan region, where dependency on coal and on costly energy imports are areas of vulnerabilities. So on inflation, so in terms of inflation, while inflation in 2022 in Europe has surprised on the upside, inflation in 2023 is likely to be lower than previously projected. And this reflects the lower energy prices, base effects, and easing of supply bottlenecks with the opening up in China. But inflation is currently not expected to reach its targets by 2024. Further, core inflation has not yet peaked in many economies due to ongoing second-round effects. Wage pressures have noticeably been building up in tight labor markets, and lagged effects due to the indexation of pensions and minimum wage adjustments. This is our story for Europe and Eastern Europe, but it also holds for the Western Balkans, albeit we expect inflation there to be much more persistent. So headline inflation in the Western Balkans is currently projected to decline from an average of almost 12% in 2022 to under 10% in 2023 and to around 4% in 2024. And even though only some of the Western Balkan countries have raised their regulated energy tariffs, and when so, they raised them less than the EU countries, inflation has been higher because the share of energy and food in the consumption basket is around twice as large. Further, the food price increases themselves have been almost twice as high in the Western Balkan region than in the EU. And we are going to publish a working paper in March, which is analyzing inflation across the Western Balkan region. And this paper finds that there are lower agricultural subsidies, weaker trade agreements in the agricultural sector, the drought in Bosnia and in Serbia. These are all factors that have contributed to this. So now on the policy responses and where we see the policy priorities in the region. So in terms of monetary policy, our message is to continue with the tightening cycle, to guide inflation back to target and to limit the second round effects. And the three central banks in the region that have their own monetary policy, Albania, North Macedonia and Serbia, have increased their policy rates over the last year. But in North Macedonia and in Serbia, real policy rates remain highly negative, more than in the euro area. And in Albania, the policy rate is now even below the ECB policy rate. And with inflation expected to stay above targets even by the end of 2024, and increase in core inflation, monetary policy tightening needs to continue to keep inflation expectation anchored and to bring inflation back to targets. So our message to policymakers is thus, stay the course on monetary policy tightening. And this emphasizes also the importance of having an independent central bank to ensure it can focus on its primary mandate of price stability. In terms of fiscal policy, a restrictive stance and adherence to fiscal rules will be required for consistency with anchoring inflation. And this will also support broader fiscal consolidation goals to rebuild room for policy maneuver with rising borrowing costs. And there are three guiding principles for fiscal support that are important for economic resilience and sustainability. They all start with a T, so it's easy to remember: targeted, temporary, and transformative. And thus, we see a need to implement support measures that target the vulnerable, encourage the efficient use of energy, and support the green transition. However, the support that was provided in response to the surge in energy prices in the Western Balkans largely consisted of broad-based tariff subsidization, with high shares of polluting coal in most Western Balkan countries. So most countries in the Western Balkans have included a significant allocation in the 2023 budget for such energy subsidies. And with the better weather conditions, not all might be needed. However, our advice is not to use this for permanent spending increases or other untargeted support, but rather to aim for a lower fiscal deficit, to rebuild fiscal buffers and to scale up much needed public investment. And further, the question comes up whether there's a need to further adjust energy tariffs in light of the lower energy prices. Our advice is yes, coupled with scaling up targeted support to the vulnerable, as it enables and incentivizes much needed investments in green energy, energy security, and energy efficiency. Let me stop here. Thank you.
Exactly on time. Thank you so much, Stephanie. Can I pass the floor on to Richard to tell us his impressions, I think, with centrally focusing on Serbia, but also other things that the bank has included in its recent reports on the Western Balkans.
Great, thank you, Dusan, and yeah, always nice to be on a panel with Stephanie and Peter. So we chatted a little bit beforehand and agreed on a sort of division of labor, if you like. So my colleague from the IMF has talked very much around short-term dynamics, and I was going to talk a little bit more around the medium to long-term. And, you know, it's inevitable. In the last few years, it's all been about the short term in, frankly, every country in the world. Inflation, energy, the war in Ukraine, COVID. But we worry from the World Bank that if you focus too much in the short term, you forget or you don't pay sufficient attention to the medium term and the important structural reforms that need to be made right across the Western Balkans. And of course, we just heard from a fantastic exposition of Serbia's case as well. So what do we find? Well, Stephanie sort of mentioned, well, moving back towards trend growth rates. In the Western Balkans, that means growing at something like 3 to 4% GDP every year. If you're sitting in the UK, Germany, US, 3 to 4% sounds pretty good, eh? But the reality is, if your per capita income in the Western Balkans, and it ranges from around $6,000, $7,000, $8,000, $9,000 per person per year, is so far away from averages in the European Union that it will essentially take the next generation to converge with incomes in the average incomes in the European Union if growth is at 3 to 4%. So what would it take to increase that rate of growth and try and see if we could achieve convergence within this generation? And this is a conference organized by the Association of Serbian Economists, so I'm going to use a little bit of economics here. When as an economist you look at the economy and where does growth come from? Well, output or growth is a function of capital, labor, and then productivity or the efficiency with which all that capital and labor is used. So what would it take to increase that growth rate right across the Western Balkans, including Serbia? Well, firstly, investment. The reality is not enough private investment is going on in the Western Balkans. In Serbia, I think average private investment is about 6% of GDP lower than the average in the European Union. Next, labor. Well, how can you get the highest return out of your labor force? Well, firstly, you need everybody working. I just checked the figures on the way here. Less than 60% of Serbians are active in the labor force. And that's about 10 percentage points lower than the average in the European Union. So something like 450,000 people in Serbia, if they were at the average for the European Union, would be in the labor force. Not to mention the enormous disparities we know between men and women, how much harder it is for women, labor force participation, structurally low right across the Western Balkans. Essentially, that's a lost opportunity for economic growth. And then finally, and perhaps most importantly, the efficiency and productivity that utilizes that capital and labor to get the highest return on economic activity. We know that the average firm in Serbia is 1/3 as efficient as the average firm in the European Union. Or put it the other way around, with the same resources, the average firm in Serbia needs 3 times as much capital and labor to produce the same. So something clearly needs to be done there. However, what's interesting is that it doesn't mean there aren't efficient firms in Serbia. In fact, the most efficient firms in Serbia would be the most efficient firms anywhere in Europe. In fact, when I looked at the figures coming here before, the top 20% of firms in Serbia pay wages that are 3 times higher than the bottom 20% in Serbia. Not 30% higher, 3 times, 300% higher. So when we talk about, in the World Bank, you might hear us talking about competition and so on. That's what it means. What would it take to allow those top 20% firms to grow faster, new firms to come in that top 20%, and frankly squeeze out the bottom 20%? Because essentially the secrets of productivity are already here, they just need to spread a lot more widely across the whole of the economy. So putting all together, we think it's possible Serbia, and frankly most of the Western Balkans, could grow at about 7% per capita per year. Growing at 7% means doubling your income within 10 years. It means converging with the European Union averages, or certainly the averages of those countries that recently joined the European Union within this generation, not the next generation. But frankly, it requires a series of difficult reforms. It means working out, well, why? What is keeping people out of the labor force? Why are 60% of all businesses in Serbia saying they can't find the right people, yet we have 400,000 people who are looking for jobs and unable to find them? Something is seriously wrong in terms of the mismatch between the demand of labor and the supply of labor. And why are firms not investing anything like enough to generate new capital? And why is there not enough competition to allow the most productive firms to grow and become a much larger share of the economy in Serbia? So I think we've temptation, and we'll continue to be focusing on inflation, on prices, on energy, on food security, on war and conflict in Europe. But let's not forget about the medium term and what it takes to grow at a much faster rate that would allow living standards in this part of the world to converge with living standards in neighboring countries in the European Union. Thanks.
Thank you very much. I already have a bunch of questions, but before we start with questions, let me pass on the floor to Peter, who is eagerly awaiting to give us his comments. Please, Peter, the floor is yours.
Thanks very much, Dushan, and good afternoon to everyone from London. I must start by saying how sorry I am not to be with you there in person this year. I've been to Kopaonik several times in the past. I was there last year, the first post-COVID one. I hugely enjoyed it, so I'm really disappointed not to be present with you. But nevertheless, I have some remarks to make, which will pick up on what Stephanie and Richard said. I'm trying to think back what I said last year. I don't want to repeat myself, and because I know a lot of the audience are people who were there last year too. But I think, if I recall rightly, I think I started on a very optimistic note last year, and I still remain optimistic, even though we've had a pretty turbulent 2022, and Stephanie has talked a bit about that. I think 3% average growth in 2022 is pretty respectable. We also see it falling a bit in 2023, an average of 2.2% in our recently produced forecast, but again bouncing back, as I think colleagues also agree, 3.4% on average in 2024, and picking up this theme of convergence that Richard talked about. We, if you look at where the region was in 2001 relative to the current EU, the 27, it was GDP per capita was only 21% of the average. Now it's 35%. So that's quite substantial progress, although it has the convergence progress has slowed down actually since the global financial crisis in 2008 and 2009. And we've been doing some back of the envelope calculations on how long it would take. Richard, you said a generation to catch up with the EU, but realistically, we're probably talking about somewhere between 40 years and 70 years of this Western Balkan region catching up with fully with the EU average. So I would see it as a question: how can we make it 40 years, and maybe all of us will be around to see that date if we live long enough, versus 70 years, where I think it's we wouldn't sadly be there to witness it. I think that there is a good story to tell about the Western Balkans. I always say this to people when asked to talk about the region and asked to talk about the investment opportunities. There really is you can tell a story of resilience and stability, and Stephanie, you talked about the macro challenges, getting inflation down, and the fiscal challenges, but I think these are ones that the region has managed pretty well now over a sustained period. So it's really then a question of structural reforms. And on that, I think we're all familiar with the multitude of problems that this region has vis-a-vis the EU, the advanced Western countries. There are many long-standing problems that all of our institutions talk about in our reports. BBRD, the transition report, always has a big section on institutional reforms and the progress countries are making, and you can see the Western Balkans consistently lagging behind on things like administrative capacity, judicial reform, overall quality of the business environment, high informal economies, barriers to trade, poor quality infrastructure, and so on and so forth. All very long-standing problems that we're all doing our best to chip away at, but will take time to really change. But I want to focus on one area here, and that's the green economy. So Stephanie, you rightly said, and I made a note that the crisis has brought forward the need to accelerate the green transition. And the Western Balkans is an area with very significant potential in green. It's got a legacy of cumulative investment up to the early 90s in either thermal or hydro, and then not much investment for quite a long time until recent years. We've seen renewable energy take off. And I really hope that this uptake in renewable energy can be accelerated. It's absolutely vital for both meeting energy needs and for the decarbonization process that this whole region, that all countries in this region urgently need. Now, I think this will need various problems to be addressed, and you know, I have a sort of little list, but I think they can be addressed. So the fact that you have small, fragmented markets, you know, that can be addressed by really encouraging regional integration of energy markets, and that's an ongoing process that we at the EBRD and other institutions are involved in. There's a lack of organized markets as well, which is sometimes discouraging to investment. What's also very discouraging sometimes for investment is political interference in the energy market. And with some of the new technologies, some of the regulation to handle these new technologies like smart grids, energy storage, it still needs to be developed. And then there are the usual issues of environmental and sustainability issues and energy poverty. So there is a big agenda there, but there really is a big potential for Western Balkans really to be a leader on new green technologies, because you know, this is a region that has a lot of natural advantages for many of the new technologies coming on board. I'd like to highlight the role also of renewable energy auctions. It's something we at the EBRD are working with a number of countries on. They're great from a sort of public finance point of view because they're efficient, they're cheap to run, and they can save public finances. And Stephanie, you and IMF colleagues will be very pleased with this, I think, because you can attract reputable investors without the need for sovereign guarantees. Now, lastly, I want to also mention the whole notion of a just transition. So any big change is going to involve dislocation. There are going to be winners and potential losers, and there will be pushback from vested interests. So it's very important, I think, that countries that are serious about this engage on a comprehensive and coherent program to address the downsides of moving towards renewable and the people who will lose jobs, to put in place programs that will help retrain and reskill those who are losing out. And again, we are working with, I mean, in Serbia and in North Macedonia, for example, on a just transition program. So part of my optimism, to sum up, is based on excitement about the progress we're seeing in renewable energy in this region. It's really vitally important. There's still a long way to go because there is still a significant dependence on carbon emitting technologies. But I think by really focusing on that, this region can really stand out and make great progress. I'll stop there, Dusan, and pass it back to you. Thank you.
Thank you, Peter. Let me then go back to our first speaker, Stephanie. Thank you for a detailed overview of a number of relevant macroeconomic issues. Your speech inspired me to ask actually two questions. One is the present stabilization programs, including the one by the European Central Bank, are all based on the classical restrictive monetary policies, which is pivoted on interest rates. And when you tighten the monetary policy through interest rates, it has far-reaching consequences on the availability and the cost of credit, which may have a very complex impact on the availability and cost of financing, which may affect investment, which may affect growth, which may affect many vital aspects that Western Balkan countries are dealing with. So it'll be interesting to hear your view on that. And connected to that, we all know that Serbia, after a number of years of precautionary standby arrangement and then the policy coordination type of instrument, which was a kind of a non-lending or non-financial type of instrument, Serbia has moved to classical standby arrangement recently. what do you think, what is your feeling, whether standby arrangement will be a way for some of the other Western Balkan countries to strengthen their stabilization efforts and their overall response to the crisis as it evolves?
Thank you very much for those questions. So let me start with the first one. So the most important issue right now is to contain inflation expectations and the second round effects. And if we do not do that right now and increase policy rates sufficiently high, we will have to increase policy rates even more later in order to bring inflation back to target. And low inflation is one of the preconditions for economic stability and growth. However, as you mentioned, we need to recognize that it can have implications on the financial systems. And this in the Western Balkan region, some of the financial systems have a fairly high share of variable interest rate loans. And this poses some challenges. However, this does not mean that central banks should not increase the policy rate, number one, and that they should engage in regulatory forbearance, as this was the case during the pandemic. Actually, our answer is clearly no. And let me explain why. So during the pandemic, this was a temporary shock, and it was basically a stillstand of the whole economy which needed to be bridged. However, this shock is now very different. This is a return of policy rates to what is considered a normal level, and thus it will be of a permanent nature, and therefore it cannot be bridged by stopgap measures. And secondly, the financial system in the regions are in a sufficiently comfortable position to deal with raising interest rates, as they are well capitalized, they are profitable, and the non-performing loans are relatively low. So nevertheless, of course, one should continue with building capital buffers and continue with stress testing vis-à-vis energy price shocks, interest rate risks, and related credit risks. But just to come back, it's important to increase policy rates because low inflation is key for macroeconomic stability and growth. And then on the second question,
maybe
whether standby arrangements will be an appropriate,
So
an appropriate response.
Exactly. On the second question, countries have been differently affected by the war of Russia in Ukraine, and then also countries were in a different financial position when the war started. I mean, some countries saved the SDR allocation that was given to all member countries in 2021. Others used it immediately. Then some countries pre-financed 2022, and then also other countries have a lot of liquidity in the domestic system. So the financial situation differs. And however, what we have also received requests now from North Macedonia. They asked for a precautionary and liquidity line, and it was approved by our board in November 2022. It's of 530 million euros, of which half of it is going to be dispersed, and the other half is precautionary. And they're also asking now for the resilience and sustainability facility. And then another member country in the region has also made a request for precautionary standby arrangement and also for this resilient and sustainability facility. And you might ask now, what is this new facility I'm talking about? Because it's actually, these are the first two countries in the region that have requested it. So this is budget support that is provided to countries in order to support the transition to a greener economy. It's 20 years maturity, 10-year grace period, and very affordable interest rates. So let me stop here.
Dusan, maybe can I just come in quickly on inflation?
Sure, go ahead.
So Stephanie's absolutely right in high inflation, hugely damaging for growth and financial market stability. It's also the biggest tax there is on inclusive growth and poverty. If you look across the Western Balkans, the bottom 10% of the population spends as much as 80% of their household income on food and energy, the two things that are rising, not just in double-digit inflation, but 20+% inflation. And right across the world, we know high inflation is the biggest tax there is on the poorest households out there. So it's tempting often to say, inflation is high, now government's pushing up interest rates and raising my financing costs. But unless we deal with these second-round effects, there are very long-term impacts on the poorest households. And one of the reasons why we're seeing poverty, which has been gradually drifting down across the Western Balkans, it went up during COVID, and now essentially it's kind of flatlining, and it's stuck around 15% of the population. That's using the adjusted $6.85 a day poverty line, essentially because the bottom end of the population are finding that their consumption is extremely stressed right now, much more so than the average household. Thanks.
If I may add a comment to this, we obviously are in a very controversial area right now, and I was going to ask Peter to comment on that. In terms of energy prices, we have a trade-off between catering to the social expectations regarding energy prices and poverty impact and efficiency. Okay, so right now, what the markets will tell you is much higher than what will be a socially acceptable level of energy prices. If you control energy prices, like there is a tendency in some of the Western Balkans countries to do, this may actually have a long-term negative impact on the restructuring of the energy sector and the incentive systems to restructure that sector and to move to renewable sources of energy, which may affect your efficiency and growth potential. So it's a kind of a trade-off between the two. You have to find the balance. We're dealing with targeting poor or vulnerable households rather than controlling the prices as a way to respond to this. But this brings me to a question for you. You mentioned investment, and you mentioned share of investment in GDP, both the public and the private. But we do have something that's becoming a very controversial subject here, which is the efficiency of investment. How much of this investment has been carefully selected? How much of it is growth friendly? How much of it is crowding in private sector, the public investment crowding in public sector? How much of it is energy friendly? How much of it is smart, green technology, and so forth? And the second question to you is, in addition to firm level productivity, and we do have some companies that are really leaders in the region and could be leaders in the world, you do have social aspects of productivity, which is if you waste time getting permits, doing many things around, then your on-the-job productivity actually suffers. You start from a negative. So your feeling about the aspects of social and enterprise level productivity.
Okay, no, several issues. So no, you're absolutely right. Let's start with the last one. Essentially, this is the cost of doing business or the quality of the investment climate. So the more time that the average entrepreneur or business owner spends dealing with regulatory requirements, permits, possibly with overzealous officials who are enforcing permits and so on, we all know about these sorts of costs, then the more inefficient the business environment, and the harder it is to attract high-quality firms. We know the big issue frankly, right across the Western Balkans is the quality of investment as much as the quantity of investment. Mm-hmm. It's not just about creating any jobs. We want to create those jobs in that top 20% of the firms, which pay much higher wages. Frankly, that's what's going to keep people in this region rather than moving out. So yes, there's definitely a big agenda right there. It also goes back, we talked about public investment. Essentially every euro or a dinar that the public sector invests is money which the private sector can't invest because it's raised through revenue. So it's justified on an economic terms when it has a multiplier effect, when there are spillovers, when there are multipliers. We know Serbia is not going to move to the green energy transition through private sector investment alone. It requires coordination investments in infrastructure, in connectivity, etc. I think the challenge is, one, balancing short term with the medium term. We just talked about the need to compensate households. That means providing targeted subsidies to those at the bottom end of the distribution today. But of course, every investment there is maybe money which is not spent on capital investment. That's not an easy trade-off. That's something policymakers have to deal with everywhere. But the issue is, well, how can we, if there are scarce public sector resources, how much do we use today? How much do we use to support growth tomorrow? How do we ensure we get the highest return on that investment? There are ways of doing that, include generally transparency, competitive public procurement, publication of things like tax expenditures in international statements. Transparency generally helps at least shed light on where public sector resources are being used efficiently and maybe where they're not being used so efficiently.
Thank you. I was just going to stress implicitly that obviously there's a possibility to answer through targeted assistance in response to many of these disruptions, but for some reason it does not have much traction among the policymakers in the Western Balkan countries. They don't believe, either because of the way it's supposed to be designed and used, so they believe more in limiting, doing energy blocks up to whatever number of kilowatts. They'll charge you this much and that much, and they seem to intervene with the market rather than help the poor households overcome the necessary market adjustment. But I just wanted to highlight this.
Sure, maybe let's not totally beat up on the Western Balkans. I mean, my own country. I think actually all of us who come from other countries know that there are a lot of bad examples. The UK gives blanket subsidies to every household for energy consumption. Frankly, show me a European country which hasn't enacted a poorly targeted, inefficient, grossly expensive subsidy. There's a political economy trade-off that needs to be made here. There's a continuum.
Very good.
Not everyone is getting it right.
Can I add one point? Yeah, so we at the IMF think it's important to adjust tariffs for the very reason that this incentivizes savings. Because if the prices are low, why would you actually invest in better technology, even in a household level? Why would you try to, put on a sweater during winter times to save on the heating? And increasing tariffs is important to incentivize saving, and this has actually been very effective in the rest of Europe. And as I mentioned before, that it's not just the milder weather that has helped. It is because people have really started to save this year.
Very good. Thank you. Let me give Peter a chance to. Out of your very interesting speech on the structural reforms and the focus on the changes in the energy field, you mentioned two topics that I think deserve some additional comment. One is the economic integration of the Western Balkan region to provide sufficient economies of scale for some industries that cannot survive without, sometimes the world market and technology dictates the level. And in some export-oriented industries, this is not the issue, but in some other industries, this may be the issue. There is an initiative integrating some countries economically across the Balkans. I wanted to hear your view on that. And the second one is about energy pricing that we mentioned already. What needs to be done to enable renewable energy sources to compete on equal grounds with other sources of energy and allow us to become more energy efficient in the long run and therefore be able to grow efficiently.
Yeah, thanks, Dusan. Excuse me. So, a very interesting discussion here on this trade-off. I mean, economics is always about trade-offs and social versus what's efficient and indeed I was going to mention the same example as Richard. The UK is one where they really struggle to. I'm receiving an energy discount, and I really I really don't need it. So that's always a very difficult one. But I did like what Stephanie said earlier about fiscal subsidies in general. That this 3 T's. I think I'm going to use that myself, Stephanie, if I may, in future things, about them being targeted, temporary, and transformative. And I think there is an increasing understanding of. I think this energy crisis has actually increased the general understanding that energy is a valuable resource, that and you can't keep on having it cheaply all the time. On integration, so here I'm thinking about all the steps, both physical infrastructure that can be put in place to increase, pipelines and so on, interconnectors that will effectively change these small countries into part of one bigger energy market. But it's also about having in place the right frameworks for trading energy. And there has been huge progress in that actually over the last 10, 15 years in terms of allowing countries with a surplus to trade it with others. So we at the EBRD are financing various projects within that broad framework, including some of the pipelines and some of the interconnectors as well. But ultimately, I go back to this trade-off about energy prices. To attract investment, I mean, Richard, you're right to say, it won't be just private investment. It needs to be a partnership with governments to have the right regulation, and also government investment and investment by institutions like ours. But private investment is really going to be absolutely key to medium and long-term success of this energy revolution. And private investors will need to know that they get a return for their investment. And that's why I wanted to emphasize earlier the point about non-political interference, but basically stability and an assurance that politicians won't come in and arbitrarily cut the prices when the understanding underlying the basis of investment was that the prices would be higher. These are very difficult choices, but I do feel, going back to the point I made earlier, that there is a strong story in the Western Balkans to sell about the stability of this region. There's still a bit of a cloud, I think, sometimes about the legacy of the 1990s and so on, but really a sort of laziness of people's thinking sometimes that this is still a region where there's convulsions and chaos and so on. But really, that's not the case. This is a country with very stable macro environments, good growth rates, convergence towards EU standards. All countries either candidates or potential candidates for membership, and when it comes to the energy sector, there's huge potential here, and I hope that message really. I hope this is a core message of the next few days here in Kopernik.
Do we have any questions from the audience? Professor Juryshin.
First of all, thank you for inspiring discussion. My question going to Madame Ebel. Is it possible for Serbia to accreditate the green transition program in the EU regulatory bodies, keeping in mind that we are in situation that we have dramatic shift from billion to trillion in EU Green Deal. For our country, it is the potential driver of growth with potential to substitute foreign direct investments. As you know, the top last year was 4.4 billion.
Actually, could I delegate this question to my colleague who is going to speak on Serbia in the next panel? She will be in a better position to answer.
Please.
Okay. I have one question for anyone who wants to answer. How do you estimate the investment efficiency of the capital investment in the Balkan, in the Western Balkan? I mean, the investment that this state is providing.
Richard, do you want to take a shot at this?
Maybe just briefly on the green transition, I think maybe one thing, I'm sure Julia will talk about a lot in the next session, but frankly the starting point is putting a price on carbon. Yes, the investment needs are massive, but unless prices start to get right, it's hard to sort of attract the right sort of investments. We know the big sort of issue on the medium-term horizon is the European Union's carbon border adjustment mechanism. What will it do to affect not just competitiveness of Serbia's investments, 70% of which go into the EU, right across the Western Balkans, starting to think about how market signals can facilitate that transition and attract the right type of investments. I mean, in terms of capital investment, I mean, we can try to measure at a sort of, you know, from a national income accounts basis. We also sometimes do it sort of bottom up when you look at a production at the firm level with microdata. Often that's more interesting because you can see the diversity across firms within a particular economy, where we have, we do normally every 3 years, every Western Balkans economy, an enterprise survey, where we collect detailed production, output, and sales data, and that allows you to see the efficiency of which investments are being made at the firm level. If it's representative, you can then agglomerate at the macro level. What's interesting, I always think, is not so much the averages as the dispersion, and that tells you what's possible within any one economy, and what you could do if you just cut off the bottom and allow the average to move up by facilitating higher and faster growth among more productive firms.
If I may misuse my position as the panel coordinator here, I guess we do have big long-term swings in the structure and the methodology of identifying, appraising, and implementing investment projects in the Balkans. We have, for the last 10 years or 15 years, we've been at the stage of completing some hard infrastructure, mainly roads and railway, the public side of this infrastructure, which is far from being complete. You will be able, I think that we are lacking non-biased studies that will estimate what was the impact of all this billions and billions of dollars invested in roads in terms of reducing the number of hours it takes to transport people and goods across Serbia and connecting to Europe via Hungary, via Croatia, connecting to Middle East and so forth. And I think these types of studies will be very important. IMF has done a study on the number of kilometers per square kilometer or per person, which is good, but it does not measure the efficiency of that infrastructure. The purpose of this infrastructure is to enable economic growth, is to enable new investment along these corridors. I think it's happening, but we still don't know how much of it is happening. Many countries, like for example, the US had a huge investment effort in roads and infrastructure in the 30s, and they are now coming back and renewing all these bridges and roads that are decaying after so many decades. We are now going through this stage, we're in the middle of this. But as soon as we complete a couple of these highway corridors and complete the network in Serbia not to be the bottleneck for economic activities, I think we'll be ready to do this. I think it's very important that we follow our own methodology of identifying and appraising investment projects before we go on to the EU methodology, which is the reduced methodology. Sort of single project pipeline makes sense if you qualify projects before they go into the pipeline. If you qualify politically eligible projects before they pass the economic test, you stand the risk of having inefficient projects. And then last but not least, the non-controversial part, which is the implementation, the procurement, and the technical ability to deliver projects on time with good quality. I think we have huge space for improvement there. Further questions, please. Okay? We have 4 minutes left. It says here 8 minutes, but we need a break between them. Please.
Hi, Nikola Altiparmakov from the Serbian Fiscal Council. The 7% GDP growth rate estimate, possible estimate, along with structural reforms coming from the World Bank sounds very optimistic. So I wanted to ask you, are you aware that no country in Europe has ever been able to achieve this rate of growth over the longer term? In particular, the most successful emerging European countries like the Baltic countries or Slovakia were able to grow only or barely 5% during their convergence period. And this was done under much more favorable demographic conditions and without any pressures for financing green transition. So Do you really think this is realistic for the Western Balkans, for the least developed part of the Europe to succeed, that something has never been done in Europe before?
I mean, there's actually, I would argue there's a lot of success in Europe. If you look back over the last, I think, 40 years, how many countries have gone from middle income status, and that's where the Western Balkans is, to high income status? And it's about 25. Now, some of them are inordinately lucky in terms of natural resources in the Middle and East. Some of them are in East Asia, in the world's fastest growing kind of economic area of dynamism, but a lot of them are in this region. It's the three Baltics, it's Slovakia, it's the Czech Republic, Slovenia, Croatia also reach high income status, Poland too, which grown sustainably at much faster rates than the Western Balkans. Okay, 7% is tough. But, you know, what was it, Keynes said in the long run we're all dead. In Peter's 70 years transition, we really are all dead. I mean, it's got to be faster than that. 3 to 4% is just not fast enough. Yes, the green transition presents a challenge. Yes, demographics are different. But then, you know, technology is changing as well. It's, you know, there are economic opportunities now which didn't exist when other countries made the transition. And, you know, ratcheting it up from 3, 4, 5, 6% is really, you know, there are a number of areas just fixing labor force participation. No country has got to high income with a, you know, less than, you know, with 30, 40% female labor force participation. Structurally low rates of private sector investment. Massive dispersion between the most efficient and the least efficient firms in the economy. So yes, 7% is the top. Although in our study, we published this a couple of years ago, Serbia's new growth engine, we sort of, if you reformed in every single area, we think you can get to 7%. Now in practice, probably not all of them, but certainly 3 to 4% should not be, I mean, business as usual ought to be, you know, the level of ambition I think needs to be raised significantly, we would argue.
Dusan, may I jump in here?
Sure, please.
I can't resist, as an Irishman's, just been Googling for Nicola, the Irish economy grew at an average rate of 9.4% between 1995 and 2000, and then an average rate of 5.9%, let's call it 6%, during the following decade. Mind you, it all ended in tears in 2008. We had a big crash then, but it can be done. 7%, yeah, it's very optimistic, but you know, let's dream.
Nicola, thank you for raising a very interesting question. I believe that the understanding the puzzle of economic growth rate between the factor-based approach for future projections and analyzing what happened after it happened, I dare doubt some of these, the validity of some of these methods, because if you go, for example, where Slovenia is today, would you be able to reconstruct Slovenia back by using the annual growth rate projections? There are some elements of this accounting framework that are not easily measured, especially when you go to huge share of services in GDP, which is driven. For example, you bring in foreign banks that are driven by salaries across countries, and there you measure value added through wages, okay? So they increase without the inertia of the traditional capital labor type of a technology-based model. All of a sudden, Ljubljanska Banka can come here and employ 20,000 people and marginally increase GDP in Serbia without any reference to the capital labor and traditional productivity measures. So I think this deserves some attention. Perhaps we should study to see whether in Baltic countries you can reconstruct back their present level of GDP per capita and the growth as we saw it over the years. I think we're running out of time. If there are no quick questions, urgent, please, quick and urgent.
Hello, I'm Charlotte McLeod, British Ambassador. It's a very quick question for Richard, actually, and a thank you for showing that very, very moving tribute to the late Prime Minister Djindjic. I thought it was an interesting read across between what he said and what you said about the economies in this region not quite managing to fulfil their potential. So it's a quick question. What is the single thing that you think would make the most difference to the economies in this region being able to deliver that potential?
I think the biggest thing will be to close the gap between male and female labor force participation, because the resources are already here. It's just about getting a higher return.
If I may chip in, our studies from before indicate that cutting corruption could increase growth significantly, and cutting waste can increase growth significantly outside of all these traditional methods. So these are exogenous sources of growth. Thank you so much for this. Sorry for being a little bit emotional at the beginning. Zoran Djindjic was a friend from the second year of university for us, and when I saw him speak and I saw how much energy he put into putting this country back on track and developing democracy, makes me really sad that he was stopped at the height of his political and reform agenda. Thank you so much for coming.
Thank you.